Well, hello, folks. I'm L.A. Little, and this is your daily NeoTA wrap. We take a look at these markets. We do it from a neoclassical perspective. Each time we ask ourselves one question, and that is what happened today, and what might it tell us about the coming days. Do the show 4 times a week, every Monday through Thursday. It's broadcast at or before 10 o'clock Eastern Time, archived on YouTube. It's under the channel L.A. Little. If you haven't subscribed, reach up there on the right-hand corner, subscribe. Anytime content's pushed, you'll be getting a notification. As far as today, what was it? It was all down, pretty much across the board. You know, we've talked about we're going to get a pullback at some point. I know it felt like it would never happen, but, you know, eventually it's going to come back. You had 6 weeks of up with just little pauses along the way. You're going to get a pullback. You start to get a pullback today. Actually, you started getting a pullback last week, but it was just little small, well, we'll look at the chart here. It was a little small pecks to the downside. Today, you actually got some decent downside action in terms of price points. Started in Asia, though. Other than Shanghai, it was pretty much down in Asia. Shanghai down tonight. Last night they were up about 3%, I believe. You had Europe down today as well. Gold was the only one bucking the trend. It was up, but the rest of the commodities all hit, and the dollar was even slightly down today. So, kind of a down day pretty much across the board. Very slight pullback in the strength dollar, which is driving all the commodities lower, and finally caught up with equity prices and drove them as well. Let's take a look at what the markets looked like today. We'll start here with the S&P 500, and as you can see, we actually, had that kind of a slight pullback going on, and today you actually had a push to the downside, about 1%. It's the biggest push that we've seen, but folks, you just came off of 6 weeks of up, and I've talked about the angle of ascent. You can see it most clearly here on the weekly. When you get this sort of an angle of ascent, you know it's not going to last, right? You know it has to come back. Just as it does on the way down, you're going to get a bounce off of it. You're going to get a retrace off of it. It's just the way it works. You don't know exactly where it's going to be necessarily, but you know it is going to come. Sometimes you'll get a signal that tells you where it's going to be. Sometimes you don't. As we talked about last week, we never got a signal to the downside to tell us that this thing was going to roll. It just didn't happen, and sometimes that's the way it is. And you have to call it like you see it. If you see it, well, you call it. And if you don't, there's nothing to call, and in this case there wasn't. So you got a pullback. Question is where will it go? The logical place is the gap. That's the spike up here off of about 2.5 weeks ago. It made that spike up. You'll see it more prominently when we move to the NASDAQ and the NDX, and let's, matter of fact, just move over to those, and you're going to see that big gap up here. That was the gap up, if you remember, off the trifecta earnings, which was Amazon, Microsoft, and Google. You had Draghi drive it up that morning, and then you gapped up off those earnings, and it never has come back. So if you look at that gap area, it's from here to there, right? That's the target. That's where this thing's trying to get to. You can expect buyers to show up, most likely, in that area. So that's the NDX. Again, I don't know if I said it on the, I don't think I said it, but you had slightly light volume come back today, which actually is a good sign for those of you who want to be bullish. Look at the NASDAQ composite, same sort of a rollover coming back. You can see the support zone there in the green. And finally, if we move over to the Russell, remember the Russell finally broke out topside on Friday, gets over the high here. You see the arrows change, right? That's telling you it's a confirmed breakout. And because it had made a pretty decent run to get there and has been the weakest one, it's the one that comes right back. Almost a full takeaway bar today, but not quite. But what it's doing is a bullish retest regen off this bar. That's the big volume bar. That was the swing point high. It's going to come back and try to test that low of that swing point high that was broken and prove that it really was a move up. And if you take and draw in the lines, you have this one here and that one there. That's the little area it's going to try to come back into. And again, I suspect you're going to find buyers in that space. This market, you don't get, I'm going to go back to the S&P, you don't get this kind of a move without there being some real buying. I mean, I've heard people say it's just short covering. I've heard a lot of things, but you don't get a move that spikes off the bottom, right? Gives you one little retrace on a swing point high test, and then just stair steps all the way up without any significant pullback. It doesn't happen unless there's some real buying. And so I expect whoever was buying it before will buy it once again as it comes back in. So that is the state of the indexes. Right now, looks like it has a little bit farther to go before it's going to give you any kind of a turn. And you'll see that buying come in probably as a result of that. The real issue is not the U.S. markets. The real issue is going to be emerging markets. And the reason for that, of course, is the strength in the dollar. So the emerging markets are where you're going to have the problems if you have them. And if we pull it over and look at it here, last week we were talking about a bearish retest regenerate. Let me draw that in correctly. A bearish retest regenerate was up in this area. It couldn't get up to it. You actually had an ABCD structure that was in place, right, that was trying to get up into that area, fell short. Now it's coming back into that same, B point, and it's testing right into this little gap here. And I'm on the EEM. That's 34.17. The top of this one's 33.85. It's going to test into that gap. That's also this big bar off the bottom. If you want to be bullish emerging markets, you really don't want to see it get back into this bar and stay in the bar for a couple bars, because if it does, the bottom becomes game on. So emerging markets, that's going to be a big story this week. How do they react, and can they find some support with the strong dollar? If we look at that dollar, let's pop over. So the dollar pulled back today as we saw off the top, but look at what it did. Just barely came back into the gap, and the buyers started buying it. Dollar doesn't want to pull back, folks. The dollar it broke the swing point highs here, broke on multiple time frames. Dollar wants to extend 2 to 3 bars. That says to me it's going to go after the swing point high 25.90, and then it's going to go after these big bar highs 26.22, 26.50 on the way back up. And if you go back and look at the back side of this, FXE, you've got all of the currencies pushing down. Yeah, they're going to try to bounce a little bit given the extent of the move down, but they broke on the way down. These are going to try to extend. They're not going to bounce all that far, most likely. It's certainly not right away unless something major happens extraneous that makes it that way, and I just don't see what that would be. So, yeah, you can get a little bounce back into these gaps off that employment number off of Friday, but I don't think you're going to see any kind of significant buying come into the weaker currencies at this point. Gold was the only one bouncing today. Everything else continued lower. These are just dead cat bounces after a huge decline. If you look at gold, kind of straight down here, all the way down, folks. We went from, let's get the price points on this. So this would probably be the bar to look at. 13, well, let's just go off the top because actually it is this one. So let's get the number at 13.25. You went as low as 104. So you took about $9 off of that. So that's about 8%, 7-8% straight down. And just as we said a while ago, you can't sustain that kind of a move. You're going to get some sort of a bounce off of it, and then you may get the rest of the move. So I would expect you to get some sort of a bounce in gold. If you look at gold on the weekly, it also broke a swing point low here. And as we just saw, it broke multiple swing point lows on this time frame. That tells me 2 to 3 bars on the longest time frame. That's this one. That means it's going to test that low before this is over. 103.43 is that number. So I would expect it to get to that area. If you look at silver, even worse today. This thing just kept going. It's coming after its swing point lows. And if you look at it on a weekly, actually this one's swing point low is the low. So it was weaker before. So silver, not going to break on multiple time frames yet, but definitely coming down to test the lows. The other big piece of the dollar story, of course, is the bonds getting sold off. Here's the 20-year notes. You're at 118.55. You get under it today. You stay under it. That's a break on this time frame. Pull this one to a weekly, also trying to break on that time frame. If the bonds continue to sell down, that's going to be bad news, because that's going to say these bonds are trying to do an ABCD structure to the downside. And if they do it, they're going to break out the lows. And so bonds taking the heat as well. What is all this about? Well, it's about the Fed. It's about the Fed saying that we are going to raise rates. We had Fed meeting. Now we had the employment number. We had 12 speakers last week in concert talking about rate rises in December. They're starting up this week saying the same thing. Folks, it's time for rates to rise. You're seeing the consequences in the markets, and it's a huge shift away from anything that's interest rate sensitive and into anything that benefits from it. And today there was not much getting bought, but if you look at the and I'm going to the major sectors here. If you look at the sectors, the ones that are going to get hit are the ones that interest rates are going to hurt. For example, any kind of REITs, right? The real estate market, even the home builders are probably going to get hit, and they're starting to get hit now. 220-point lows here. It's trying to break. The utilities are going to get hit. Now they got whacked hugely on Friday, and they're going to get hit again. A little bounce, and then they'll come back after them one more time. Even your dividend stocks are going to get hit, because now you're going to have some competition to those dividends. And so you're seeing in terms of weakness, those are the areas that you would expect it. Now, where are you going to see the strength? Well, where you've seen it, technology, you're going to see it probably in the discretionary still, right? Because people's earnings and wages are going up. I mean, that's the reason for the rate hike, right? And you'll probably see it in the banks. XLF, of course, is multinationals, but if you move on down the line to the regionals and so forth, you're going to see strength come into those. And so you're seeing the rotation out of one group, rotation into another. So that's a broad picture, a broad brushstroke of what's really happening out here. And that's what you should be thinking about when you're thinking about, do I buy? And if so, what do I buy? And so if it's up to me, I would be saying, hey, you've been asking for a pullback. You're getting a pullback. Now you have to be able to pull the trigger and do some buying on that pullback as it unfolds. And I believe that's how you should be viewing this. The overseas markets, you got to watch what they're doing. But so far, they're doing just what you would expect. You're seeing weakness in emerging markets. You're seeing strength elsewhere. And so I'm going to pop up real quick here before I cut it off for tonight. I'm going to pop up the mature markets. Here's France. France comes down a little bit. Volume is light. Germany, the big dog in Europe, comes down. Volume is light. If you move over to Asia, if we go look at anything commodities going to get killed, it's like Australia. It's going to get hit, right? And they do. And even India, emerging markets, right? It's going to get hit. They got to bounce off the lows tonight, but they got hit. Brazil, they're both emerging market and commodity. They're like a double whammy with those. And even if you go to the more mature market like Hong Kong, still can't rise. Only thing rising is Shanghai, and that's on the belief that China is going to ease even farther. Folks, that's it for tonight. I think that gives you a good feel for what's going on. I'm LA. This is and was your daily NeoTA wrap. Have yourself a great night. I'll see you tomorrow. Good night.